and welcome to the For Her Empire podcast. I'm your host, Abby Ngauche, and in this podcast, we address the personal and the business issues that female entrepreneurs face in their day-to-day lives. My guest today is Katie Swanson. She's the founder of Change Collaborative. Now, Change Collaborative sort of acts as your virtual CFO, that's your chief financial officer, and Katie is the founder of that. We'll probably learn a bit more about what exactly a CFO does. But today she'll tell us about how to build a forecast for your business. Now, this is a must, especially when you're at the startup phase of your business and your sales side, your financial side is a bit iffy, and there's only so much you could learn from blog posts. So, hi, Katie.
Hello, thank you. As Abby mentioned, I'm founder of Change Collaborative. Kind of the buzzword with that is virtual CFO, but what does that really mean to us? That means we're bringing a corporate level finance function on a fractional basis to small businesses with between $2 million and $20 million of annual revenue. But all of those same services that bigger businesses need and that we serve is relevant to you and your coaching business, just on kind of a smaller level. So we'll get into that. But first, I wanted to start off and tell you how I got to where I am today, and maybe it'll help you in your journey. So I kind of started, I really feel like this started 8 years ago for me, probably over 8 years ago, because my daughter will be 2 in a couple months, or she'll be 8 in a couple months. So I decided that when I had kids, I was not going to work full time. And I asked my employer then if I could go on a reduced hour schedule, and they agreed. So I was working in corporate accounting and finance at that time, and that worked out, and I loved it. I worked 3/4 time while I was there, and I worked for them for a total of 7 years. And then life changes, we moved, and changing jobs, I just set that precedent that I'm not working full time. But the problem comes in where I was usually the only one, or for the reasons that I set that boundary was because I'm a mom and I had a family, and I knew how I wanted to show up in life and as a mom, and in working a full-time job that was not going to let me be the person that I wanted to be. So just feeling very out of alignment in my job led me to create Change Collaborative late last spring, so late last summer of 2020. And really get back to doing the kind of work that I like to do for the size of businesses that I like to work with on kind of my own schedule that lets me determine what that is so that I can show up as my whole self in life. And so in that too, you guys might be interested to learn, I worked with a career coach for 7 months and to help me figure out what it was that I really needed to do. And I ended up, once I determined that, I ended up and worked with him for another couple months to make sure that I actually followed through with that. And even today, I feel like I'm surrounded by so many individuals in my business that are kind of helping coach me through that. I'm part of a mastermind group with an individual that does coaching for small businesses. I have a business coach. I have kind of an outsourced marketing director that helps me understand that. So definitely what you guys are doing is wonderful, and individuals in life or in business need you. So in founding my business, I have goals, and I have goals to grow this to $1 million of annual revenue. And in thinking about that, I put a financial forecast together. And so you'll want to do the same with your business to help you understand what are your goals? And maybe you've kind of thought about this and how many customers can you serve, or how many customers do you want to serve, but then putting numbers to that. So what does that mean financially for you? So that's kind of where I would start in building a forecast is forecasting out that revenue for a year based on what your goals are. And if you haven't thought about goals, it might be a good time to think about that. So come up with some kind of number of clients, or I don't know where you want to start with that goal, but then put a number to it. And that's really kind of where your financial forecast can start. And then you need to figure out what you need to do to get there. So that then would be kind of your cost associated with that revenue. Abby mentioned you could run ad campaigns, so you need to understand the cost of that and how many ad campaigns you need to run in order to get the client base that you want. or if that's hiring a virtual assistant to help with anything. So those are going to be your costs. So then you need to think about what your costs are. I mean, you probably have maybe some subscriptions. Yeah, so think about what those costs are in your business.
Your Zoom, all of that sort of comes towards your monthly expenses.
Mm-hmm. And think about too, I think this, some of you might be working this as a side business while you're working in your full-time job. So really forecasting this out and understanding, right, what's your capacity based on what you're willing to work, and what can you do with the time that you have. And then if you're wanting to leave your full-time job to go do this kind of your side job full-time, how big does that need to be before you can do that? And what's realistic and getting there, how long is it going to take you to get there, so that you know what's on the horizon and when you can leave your job. Or if you're so one thing for me, I was working in public accounting, and so I did not do this as a side job before I left. That wasn't right, like there's non-competes, and I really couldn't do that. So I actually left with $0 coming in. And I'll be honest, like even today, so that was like 7 months ago, I'm not there yet. So you have to be ready for that. So you have to know how long you may have to go without, and I mean, I do have some income, and we are profitable, but I had an investment in to get started. So what, do you have an investment that might, depending on what you have what you're able to invest, or, coming up with kind of your wants in your business, and when are you able to afford those based on when your clients are coming on. I mean, that's really what a forecast can help you do, is understand based on your client base today, what you're making, and when are you able to make an investment in something else that is going to help drive your business. When can you get to a point where you can afford that? So forecasting that out, thinking about your current clients, what's your goal for the future, kind of forecast that out over the next, by month is what I would do, over the next year at a minimum, potentially 3 years, so that you know what that looks like for you, so that you can make the decisions in your business. So I did that for my business. I'm getting there. So then kind of once you have that, what that year looks like, break it down by quarter, by month, and then by activity, to make sure that you're doing the activities today that's going to generate the business in order for you to meet your forecast. Or, is that realistic? Are you able to devote that much time to your business in order to meet those goals? So that's really what a forecast can do for you. It will help you if you already have goals, put numbers to your goals. If you don't already have goals, it'll make you think about them and put numbers to it. And maybe it'll even help you understand your pricing. So based on what you thought your pricing is and what your client base is, you map that out, right? Put numbers to that, and then map out your costs. And is it viable? Like, are you really making money at the end of the day? And if you're not, then maybe you need to readjust your pricing, or you need to look at your costs. So that'll help you see that too. Or, maybe you're not profitable yet because you don't have enough clients to do what they call break even. But then how many more clients do you need in order to get there and really start being profitable? So it just really helps you plan. So it's, we like to call it business financial planning and analysis. So kind of understanding what your numbers are today, putting a goal on paper, putting numbers to it, so that you can plan for what it is you want to achieve. That's really what a forecast can do for you.
Okay, now I have a question. So you just jumped right into it. It's not like you worked on Chain Collaborative on the side, and then how was it just going straight into it, without a backup plan, so to speak? How was that for you, dude?
Well, so I did kind of jump into it, right, with zero revenue to start, but I did plan. I'm in the numbers field, so certainly finances are a big deal to me. So I did plan to not have income for a certain amount of time. So I set us up personally in a financial situation that we could handle that. So that I had to invest in the business, and then two, I needed to make sure that we could live essentially for a year or two without income, which, I mean, I have income. It's just not, I haven't replaced my income yet from leaving my full-time job.
Yeah.
So the way I did that, and right, so I did this in the pandemic. I made this decision in the pandemic, which I just needed to prepare us, right? I mean, anything could happen at any point, but especially then it made it very real that, okay, I'm leaving my job. What if my husband loses his job? Like, I didn't want that to derail my plans because I had made the decision to do this. And then, geez, what if he loses his job? Am I going to feel like I need to go find a corporate job to make money for our family? And so luckily, mortgage interest rates like plummeted. We had a pretty good interest rate on our mortgage anyway, but you know, he had kind of talked about refinancing. I was like, okay, well, if we refinance our mortgage at a lower rate, what we could, well, yeah, we had a lot of equity. And so we were able to take out more money to have in the bank as kind of our security blanket financially. And we refinanced our 30-year note for 20 years, got some sizable cash out of it, and actually we're going to end up in payback less. So it was a good, so we weren't going to be behind, I guess, in doing that. And so I needed that financial security in order to be secure in making the leap that I did.
So we've talked about breaking even, and so I understand. I know what that means. So for someone who's like completely new to like the word breaking even, how would you explain it to like a new female entrepreneur?
Right. So you want to know how much your costs are and how much revenue you need to generate in order to cover those costs. That's kind of where you break even. It's to get to like a net zero revenue minus expenses.
Okay. So in simple terms, you're making enough to cover like your expenses. You're making zero profit, but you're not in debt or any loss. You're just there.
Right. Yeah. So then anything above that, right? So then any new client that you would bring on would be money in your pocket.
Yeah. And so you talked about setting a goal and then seeing if your goal is feasible and if you need to increase your price or know how many clients you need to bring in to meet this goal. And so is the goal in terms of number of clients brought, or is the goal in terms of total revenue per month? Which is more realistic?
I think it's probably just however you think about it. Like I'm in finance, so I just tend to think about the numbers first. So in my business, I said, I want to grow to $1 million of annual revenue. Then what does that mean client-wise? So I have a target client and I know about what they would pay for my services. So then I broke it down to that's probably eventually like 30 to 50 clients. So for you, but you might be thinking more on the service side. Like I want to serve how many clients, or you're thinking about your capacity. Like I know I can serve, I don't know if it's 20 clients a month. And so then, okay, my goal is 20 clients, then putting the number to that. So I think it just depends on how your mind works.
Okay. And say, for example, you're someone who has zero financial background whatsoever. So now I know I need, let's say, $5,000 to break even in a year. If I covered all my expenses for the year, both for ads, both for my virtual assistant, for my subscription, operational costs, and I know it's going to cost me in a year $5,000. So I need to make that much to break even, and so and I'm telling myself, okay, I need to make this amount of clients per month, consistently, even if one drops off, one goes on, but an average of this number of clients per month. Now, after I've done that, am I set? Or are there other things I need to do after that?
After you break even, are you said, or after you do that
After
amount?
I've agreed mentally that, okay, I need to have 10 clients per month, an average of 10 clients per month for the next 12 months to make this $5,000 so I can
Mhm.
break even. So now I know what my costs are. I know the number of clients I need to have to meet that cost. Is there a step after that?
Yeah, so I think that's good to know that, but then you need to have a goal for yourself. So hopefully it's to make a profit. So you'll want your goal to reach beyond what that break-even point is. But yeah, your first goal may just be to get there. And when do you want to get there by, right? So you start this business today, you want to be there by 3 months from now. And what do you need to do then to get enough clients to get you 3 months from now? Or if you're good, like maybe you look at that and then you realize capacity wise, maybe that's not realistic. So you're like, okay, I can't do that in 3 months, but I could do it in 6 months. Because then, I mean, and that's really going to help you prepare right? I'm thinking financials. Like, you're not going to break even for 6 months. So what's going to finance your business until you do get there, right? Do you have the money to invest in your business for 6 months until you actually start generating a profit once you reach that break even? So it's going to, help you plan on making this move.
Okay. So I'm going to ask a question in one of my last workshops. So let's ask this question. So she asked that the money I put into this business to cover my operational costs until I start making profits, would I take that? Can I see that amount of money as a loan? And after the business start making profits, I get that amount back? Is that something that's possible or something that's realistic or something that people do?
Right. So I'm going to say, so I'll answer this like technically, and then I'll say like, yeah, you can do that. So it's probably going to depend on your entity structure as to how you need to classify that, whether it's a loan or it's like an investment in the company. I guess I can say personally what I'm doing, right? So I actually invested $20,000 of our own personal money and just recorded it as like owner investment because I'm a sole proprietor, like I'm an LLC, so I can do that in the United States the way that I don't do taxes. So I don't want to get into like tax advice because it really depends on your business and how you're set up and structured. But then I will right. So I probably I really just broke even now based on my investment into the company. I wasn't quite there at the end of 2020, but I'm probably there now. And so then I have paid myself some money, and then I hope then going forward I can pay myself some money every month, but I'm still not quite still haven't quite replaced my income and leaving my full-time job. But so I put the money in. I know what that amount was. I categorized it as an owner investment. And then as I feel like the business can handle it, I will be taking that money back out. Or, I mean, you can do, if you need it, take it out. If you don't, you could leave it in the business as an investment. And
Okay. All right. Ah, yeah, I guess that makes sense. The person who had asked this was Claudia Degen. She's a happiness coach in Netherlands. So she wanted to know if it's possible after her coaching business gets to a point where, from her personal savings, the money she had put in to start her coaching business, when it becomes profitable, if she can slowly have the business pay her back that amount as a loan. Sort of.
Okay. Yeah, and that's the Netherlands, and I don't know anything about their entity structure. And
right.
So I would get with somebody in the Netherlands that understands finances and taxes.
But I think theoretically, I mean, I'm not sure tax-wise, but theoretically it should be possible. I mean, you are paying yourself from the profits you get. So you just, I guess, just factor in, give it a name somewhere and just call it.
Yeah, I don't. In the United States, it's not going to be that easy because it really depends on your entity structure as to how you would classify that when you put it in, and how that's classified when you start taking money out, whether it's payroll or distributions or what.
Okay. And so you had also mentioned after you've done the forecast, you sort of start thinking, what will my day-to-day activities look like for me to meet this goal? So let's say for you, you want to make $1 million at the end of the year. Like, do you have to start factoring in how many prospective calls I need to make to close this amount of clients per month, and how much on average that will be at the end of the year? Do you have to like factor that as well?
Yeah, so I understand what I need to close essentially per month. What I don't understand, because I am not a sales expert, is how many conversations I need to be having in order to convert those sales. So, a good salesperson would know that and what that process is. And that would be somebody that I could use as a coach in my business to understand. But
Okay, if you're listening to this and you have the answer to this, please come guide us.
So I certainly have a lot of conversations and try to position myself in the right conversations to have to get to generate the right business that I'm looking for. Now, exactly like the calculation of what that needs to be in order to result in a sales conversation that would result in closing a sale, I don't have that calculation down. But I do know, based on what my annual revenue goal is, how many I should be converting, how many sales I should be closing each month.
Oh, okay.
And then it's really, just keep momentum. That's my sales advice.
Okay.
Hopefully I find something more technical and process driven, but just keep some momentum and make sure you're continuing to have conversations and being in the place that you need to be to get new business.
Yeah, okay. And so what do you do when your business is sort of like burning money really fast and nothing is really coming in? Because at the beginning of it, it's all your money anyway that you're putting in until you can break even and start making profits. So but what do you do when you feel like you're burning through money really fast?
I don't know if I felt that way. But if you feel like you're running through money really fast, then stop.
Okay.
Right? That's part of having this forecast, right? Is to know what your expenses are and to hold yourself accountable to that, to know what you can be spending so you're prepared for that, so that you don't get that feeling of, geez, I feel like I'm running through money really fast. Am I going to have enough? That's what that forecast should be. It should kind of be your guide to how you spend your money, because you've put that plan together based on your goals and based on the revenue you're bringing in or the revenue you think you're going to bring in. So go back to that forecast as your accountable plan to make sure you're not spending more than you plan to.
Yeah. Okay, I'm not sure if you're the right person to ask this, but you're the financial expert here, so let me just ask anyway. Okay, so there's this belief among the entrepreneurial community that when you're in your first year of business and you're typically not making that much money in the first place, that you should not spend the investment money, your cash in hand on ads, because that's just gonna make you lose money a lot faster. So do you think that's like a proper strategy?
So I think sometimes you have to spend money to make money. Yeah. So that's where a financial forecast is going to help you in understanding what you can, how far your cash will go, and being prepared for that, and then being prepared for when that runs out, and maybe reevaluate your plan and reevaluate what you're doing, and are you spending your money in the right place? I don't think, sometimes you have to spend money to make money, just know how much you financially can handle. Yeah. And know, potentially that might get you where you want to go faster. Like maybe you don't need to do that, but you may not get there as fast if you aren't investing in marketing and advertising.
I guess when you look at the amount of money you have, if you can realistically afford to run that ad without it really hitting your pocket really heavily, I guess you can still run the ads, but then you have to know, like, out of this ad, what results am I getting? If I get this result, or like what would be a good result? What would be a bad result? What result do I get that would think, oh, okay, money well spent, and see if it's worth putting the amount of money in there. I personally run ads. I'm doing it the slow way is kind of exhausting. So I just like running ads instead and get to where I want to go a lot faster. But I have put that in the budget that this is my monthly ad spend, so I can really afford to spend that every month. And
if you're not getting the result that you want, then asking why.
That'll probably help.
And then what you could change to do that. And I think understanding your industry benchmarks on that, I don't know, you guys are in the coaching industry, how much you spend and how much, I don't know if you're talking like social media ads. I actually just ran a social media campaign and wouldn't say I have direct success with that. I think there's some very good indirect results of that. But then just understanding, I have a coach, like my marketing director that kind of coached me through that, right? Like she's in that space. She knows what benchmarks are for the industry. And I guess be satisfied with that or not, and make adjustments if you're not.
Yeah. And at what point would you say it's a good idea to pivot on your business idea? Like financially, at what point would you say, whoa, this looks really terrible, like this business idea, maybe just reconsider? At what point financially would you say that you should do that?
I think you need to set that for yourself based on your goals and your cash, right? You don't want to get to a point where you're out of cash. So, what point is that for you where I think you need to set that as the business owner, and know that you need to set that, I guess. And that financial plan will help you understand kind of when, like, if you don't have, like, how long your cash will last, I guess, right? So if you create your financial plan, and everything's just cash basis, understanding what cash you have, what cash would be coming in, what cash would be going out, and how long that would last you. So you could even run, so I like this question because you could run scenarios. So scenarios are kind of like your what if. So maybe you put your goal together and you put your financial forecast or your financial plan together of what you want to happen as your goal, but then being prepared for if that doesn't happen. So that's your scenario. That's your what if. Okay, I put this plan together, but what if I don't meet that goal? Or what if, actual reality is worse than what this plan is, and being able to plan for that. So maybe that answers that question.
Well,
having your goal, but then having your worst case. Like, so maybe you have a goal, but then what if you don't get any revenue for a year? What position are you going to be in? And can you be in that position? Or if you don't get any revenue for a year, how much cash do you have and how long will that last you?
Like, what's your backup plan if you don't get this amount of money? And if you don't get as much, what expenses or what exactly literally you have go towards, I guess. That makes sense. Is there a question I should have asked? I feel like I should have asked a question about forecasting I should have asked.
Maybe you're one. You could start by just writing this on a piece of paper if you want. You could use Excel if you have, or a Google sheet. It doesn't need to be anything extravagant. It can be as easy as putting it on paper, putting it in Excel or Google sheet, or there are apps that allow you to to put forecasts together, so it can be as sophisticated as that then integrate also with your accounting application that you're using. So, I mean, if you just search that online, you could find some. I use Fathom for forecasting. I've used Clockwork AI, which is probably geared towards larger businesses. And then for cash forecasting, I use Helm. There's so many out there though, that you could search that and find, and put it on, especially on the cash forecasting side, there's lots of free apps.
Okay. And when most of your clients come to you as the financial person, what's the misconception about what you do, about what Change Collaborative does? You tend to get, like, what idea of what you do? What do they think about what you do?
Honestly, I don't think a lot of people know that this service is available to them because it's very specific and it's targeting a client size that generally has worked with a traditional CPA firm that doesn't know really what this means. They're not large enough to hire that expertise in-house. They're not large enough to have, they just don't know that that expertise is there, that they can get it on a fractional basis. So they're used to working with a traditional CPA firm, somebody that does their taxes. They think an accountant does like taxes and audit, and that's it. Whereas there's so many accountants that don't do taxes and don't do audit, that really just like accounting and finance. So that's probably a misconception, is going to a CPA and thinking all they can do is taxes and audit.
Do most people who come to you, do you actually do any forecasting before, or you sort of guide them through that forecasting period?
I'm going to, so the clients that have come to me so far have not done this before. One client came to me wanting to budget. So budget is generally like a stat, like you prepare that once and then it doesn't change, whereas your forecast can be moving based on changing dynamics in your business operations.
Okay.
So no, they haven't. So then another client is a startup, and so no, she hadn't actually put a formal forecast together.
Mm-hmm. And is the forecast something that just, let's say let me give an example. So let's say I'm Abigail, and Abigail has a business partner. Who does the forecast? Just Abigail, or we are both doing it together? Or Abigail does her forecast, her partner does her forecast, and then we compare notes? Huh?
I'm sorry, are you asking like if we worked together on a forecast?
Like if it's like a sole entrepreneurship, I guess the founder will be the one who will do the forecast. So if it's a business owned by two people, who does the forecast? Do both do their own forecast and compare notes, or they do one forecast together?
No, I mean, you should, right? Like you should be aligned in what your goal is, and probably the more financial savvy person maybe is the one that's going to put that together, or you would outsource it to somebody like myself. But then that's a very collaborative conversation. Like understand what your goals are, where is the company going, and maybe you're already aligned in that vision. And so then that makes it easier. Maybe just one person could put that together, but then you would come back and you would look at that together. And both of you then could vet it and make sure you're in alignment on that. Now, if you were working with someone like me, like an outsider, I would need to understand that about your company, your vision, your goals, where are you going? I would probably do some, so then if you have historical information, I would use that then, and the information that I gathered from kind of our collaborative session of where you're going, what your goals are, to put a forecast together. And then we would meet and go over that to make sure that aligns with what you had in mind, where the business was going. And then it's kind of put in place, and we would tweak that every month or every quarter then going forward based on, okay, here's what's happened in your business. Does this still look aligned with where it is that you're going? Is this kind of what has happened in your business for the last month or the last 3 months? And if it's not, understanding why, and then understanding, does that impact the forecast that we put together? And do we need to adjust the forecast, or are you going to adjust operations to still meet the goal that we had established for ourselves? So really you kind of put it together once, but you continually to come back to it and make sure it's still viable and meets where the business is going and adjust it accordingly.
Oh, okay. So just to confirm, you update the forecast either monthly or quarterly. It's something you have to continue looking at.
Yeah, just based on, right. I mean, if you're operating according to plan, then maybe you don't need to. But if there's, if you've set this plan in place and operationally you're not operating the way you had planned, understanding why, that could be good or bad, and then readjusting your forecast based on that.
Oh, okay. And so what's the process of someone working with you, working with Change Collaborative? Because you had mentioned that if you're doing a forecast for someone, you create that based on their goals, their vision, historical data, and then the collaborative session they had with you. So that session, how does that happen?
So I work completely virtual. So when a new client would come on, we'd have an onboarding call, just a quick introduction of, this is what we're working on. If there are multiple individuals on the team that I would be working with, then we all need to be on the same page of this is what I'm doing. These are the people we'll be working with, some introductions. And then we would set kind of our strategy meeting or our forecasting meeting, to where then it's very in-depth, talking about what your goals are, learning more about the business. So that's probably like a 2-hour meeting. And from there, then I would go develop the forecast. Oh. And there might be questions back and forth in between that time. And then present a draft within probably like 45 days of starting to work with somebody. Present a draft and have them look at it, understand, do we need to tweak anything? And then get that done, and then rolling on from there. We would revisit it every month. So if they have an in-house bookkeeper or accountant, that they would close their books essentially every month. And so then like 5 days plus that close period, we would come in and so in that 5 days, we would have put together some analytics reports on what happened in their business and help them understand then how that relates to the forecast that we generated, and have discussions around that, depending on how that looks, if it looks in line, if it looks better or worse, and are we going to adjust the forecast, or they can then think about what they need to adjust in operations in order to meet their goals, and do that process again the next month.
Oh, it's like repeat and rinse over and over. Oh. So if you don't meet your forecast, say for the quarter, and if you did exceed your forecast for the quarter, is there a difference? Like, let's say, back to example, I wanted to make 5,000 per quarter. So if I earned less than that, what happens? If I earn more than that, what happens?
Right. So if you didn't meet your forecast, are you going to, so then we would kind of show you what that looks like based on what's actually happened in your business and what we forecasted out for the remainder of the year.
Okay.
Are you going to go with that? And that's then kind of your goal, which is going to be less than what we had originally forecasted. Are you like, oh no, that's not going to work for us, and you're going to get your tail in gear and decide what needs to happen so that you can meet your original forecast? Like, you're already behind now, so you're going to have to do some catch up to get where you want to be by the end of the year, or you just take where you are so far in the year with the remaining forecast that you already had in place, and you're good with that. Or do you need to readjust the remaining forecast to show it down from what you originally planned? Because now there's more information that maybe that original forecast, because it's just an estimate. Like, you don't know what's really going to happen.
Yeah.
But then, so maybe we reforecast then the rest of the year based on what's actually happened in the business so far, and make sure you're good with that. And if you're not good with it, then maybe you need to make some operational adjustments to get you where you want to be by the end of the year.
And if you exceed that, then you're like, oh, let's keep this on, I guess.
Yeah, I mean, yeah, that's then totally up to the business owner and operations, how they want to handle that. I mean, so then you could see, okay, since your actual, and maybe it's just a timing thing. So maybe what you had planned on happening 3 months from now came to fruition already. And so that was in that forecast. So maybe your first 3 months were higher than you expected, but then maybe 3 months from now, we need to readjust the forecast down because what we thought was going to happen in 3 months has already happened. Yeah. So, maybe it's a timing issue. Maybe it's something really good happened that you didn't expect. And that's great. Then your year-end forecast will just show higher than what we had originally planned.
Okay. And that first session with you, the first strategy session, or I guess session to see what the best solution package for them. How do they book that session with you?
How do they book that session?
Yeah, with you, like the first session a prospect has with you before our meeting at like.
Yeah, and so to just have an initial conversation with me, you can go to my website, which is www.changecollaborative.co, and there's a contact us form. So if you fill out that form, we'll evaluate that form and then be in touch with you and send a booking link to book a virtual call.
Oh, okay.
That's really just to get the conversation started about an engagement. So from there, we would have kind of an introductory call to get to know each other, see if we're the right fit to work together based on who we like to work with and who you are as a business. And then from there, we would probably develop if we both mutually agreed that we wanted to work together going forward, we would put together a proposal. Actually, we'd probably have more an in-depth conversation of what it is you're really looking for. I'd put together a pricing proposal. We'd go over that. You'd sign an engagement letter, and then we kind of kick off things.
Like a smooth process. Okay, so do you have anything else you want to add as we wrap up?
No, I mean, I think it's just really important to understand what your business goals are and put numbers to them so you can be prepared for what's to come.
Yeah, like prepared for everything, including worst case scenarios. Like if you don't meet your goals for the quarter, for the year, for like next 6 months, what happens? Like, how do you go forward? Like, plan all of that, no matter how boring it seems or how negative it feels. Like you're planning for the worst, still do it.
Right. Yeah.
Okay, so that's Katie Swanson from Change Collaborative. Don't forget to start the conversation with her. Fill the contact form on the website, www.changecollaborative.co. That's cool, not .com, right?
Correct.
Yeah, that's cool. All right. Thanks for having me here and talking about finances, which is typically not a very fun topic anyone wants to talk about. But hey, we had a conversation.
We did.
All right, bye.
Bye, guys.